Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Wednesday, the 16th of September. Starting off with Chesterfield Resources, a stock which I've been meaning to look at for quite some time, but managed to miss doing it yesterday, which obviously would have been rather helpful given what's happened today. But current situation, end of day close above the August intraday peak there at 7 3/4 pence, should be enough to take the shares on the journey up towards that April resistance line projection, currently pointing to around 12 pence. Hopefully you could see that by the end of next month. Onto a stock which I haven't looked at for quite a while, ecoatlantic. Here, the reason for inclusion, although it doesn't look like a spectacular chart just yet, is the bear trap that we've had for September versus July. So the low then 19 pence, we flipped down to 18 pence and then have bounced back quite sharply. The view is that while we're above 18 pence, we're looking for further upside, possibly as high as the top of the rising trend channel from April up to the 35 pence level over the next 1 to 2 months. And ideally, there's no end of day close even back below that uptrend line there from March at 21 pence. So the best case scenario here is that the shares just keep moving after that brief trap that they delivered to start the week. Stock which has been requested by a long-standing listener to the Bulletin Board Heroes is next, IQai. And lo and behold, we see that the shares are just breaking through that resistance there from late August, 5.95 pence. So an end of day close above that should now be enough to take IQai up towards the top of that rising trend channel from the beginning of June, as high as 10 pence. And that could be seen hopefully over the next 4 to 6 weeks or even less, given that we've spent so long consolidating just below the 6 pence resistance zone. As it is a bit of a thin day, we're looking at one or two of the stocks in the pharma area. Looked at quite a few yesterday, so just sort of completing the list. Novavax finally broken that initial August resistance at £3.42, so above that on an end of day close basis, and hopefully we'll be up towards the top of that rising trend channel from May, running through to £4.75. Ideally, that's hit by the end of next month, and obviously, if you're a fan of the stock, by the end of this month. But while we're above that 342 level, looking pretty set fair for Novavax, especially given that we've had 3 or 4 months of extended consolidation after that spike that the shares served up in April. On to Oxford Biodynamics, where here we've got the shares on the ongoing breakout that we've had, looking very constructive indeed, in the sense that from the latter part of last month, old resistance at 90 pence has basically become new support. We've got this extended bull flag here, so just really looking for, or trying to anticipate when we're going to get that end of day close through 98 pence and into higher ground. There's not really much resistance on the chart, hopefully now, until the top of that rising trend channel from December at £1.60. So looking very interesting indeed in terms of the charting position there. At this stage, only really back below the 20-day moving average at around 88 pence on an end of day close, really the only thing that would delay the upside scenario, but that looks very well set indeed at Oxford. Another requested stock is Cerium Technologies. The shares did actually deliver last month with the break of that resistance line, and sort of peaked near 35 pence. But disappointing part is the return that the shares have had down now to sort of the sub 20 area. Briefly, what we're looking for here probably is just an end of day close through 22 pence, just above the 50-day moving average, to resume the upside scenario. But really, at the moment, nothing really has changed in terms of saying, while we're above the upper teens, looking for an eventual move to the top of that broadening triangle from November as high as 50 pence. And that could be seen hopefully over the next 1 to 2 months. But the trigger here really, I think, an end of day close through 22 pence mid price, which isn't too much or too far away at the moment. On to Synergen, and here Very disappointing last month where we had an attempted breakout there through 250 through up to 260, and lo and behold, there was just a complete bull trap through the July resistance of 240. So that was a failed setup. Current situation is that we're looking at support so far above the 50-day moving average at £1.79. While we're above that, looking for at least a retest of this month's resistance towards £2.25. If you're cautious on the shares, probably the trigger now would be an end-of-day close above the 20-day moving average at £2.03. That would hopefully then ensure that the stock went up and stayed up rather than pull the rug as it did last month. Just a few stocks to go now. Happy position now for Thor Mining. Here you can see that we've had we have an ongoing breakout attempt, sort of an extended bull flag, and really looks as though an end of day close today above 0.8 will be enough to take us up to the top of that rising trend channel from December, currently pointing to 1.1 pence, and hopefully that's seen over the next 2 to 4 weeks. Only really back below 0.7 pence on an end of day close basis, delaying the upside scenario. Tertiary Minerals, good to see that back as well. Private investor favorite. Here we have just really in the last few days, in fact, I mean, I suppose this month to date has been quite positive. We had the gap higher, came back to fill the gap and have bounced in a U-shaped pattern. About 0.3 pence on an end of day, end of week close should be enough now to take the shares up to at least retest the lower 0.4s, i.e. 0.4 to 0.45. The big picture target here, though, above 0.3 would be a move up towards the top of the rising trend channel that I've just drawn from March, currently heading for 0.6 pence. Tech Capital in the news today with more positive updates. We've got a gap here through above the 50-day moving average at 10 pence, so above that, looking for the top of that rising trend channel from May as high as 20 pence. Obviously, the stock has been rather frustrating, so one would say that at least have an end-of-day close back below that late July peak at 11.7 pence as the notional stop loss on any long activity there. Finishing off with Victoria Oil and Gas, and a bit of a sort of speculative one here, just trying to sort of guess ahead of time, jump the gun rather is the correct phrase, in terms of a possible move up higher here. Be fun to see whether it does actually work, but at the moment above 2.75 pence and the floor of that April triangle, we could head up towards 6 pence at the resistance line, and if you're waiting for a buy trigger there, then really an end of day close through 3.5 pence would be the one to watch out for. That's it for me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.